What's going on, guys? It's Andy here. Welcome back to the Andy Kandola Show. So I got a good video for you guys today. I'm going to basically share with you guys an update in regards to this portfolio. Now, here's the thing. This portfolio is currently at its all-time high. The current value in the portfolio is sitting at $76,811. That makes me very happy. Now, just in this last week, the market has been up, and because we have a vaccine that's going to be coming out, and given the results of 90% on this vaccine, that's good news. Now, in this video, guys, I have made some big trades. I've sold out of 4 stocks. So I'm going to go ahead and share with you guys the 4 stocks that I've sold out of, plus all the stocks that I've been investing in. But before we get into that, if you're new to this channel, don't forget to subscribe to the channel down below. I like to go ahead and keep you guys fully updated in regards to my portfolio, be transparent on a week-to-week basis, and take you guys on this journey. I focus on dividend-based portfolio, so all these stocks do pay me out a dividend on every single week and every single month. So as I grow this portfolio, I'm going to go ahead and keep you guys posted in every single move that I go ahead and make. Now, in regards to this portfolio, just in the last day, I'm up almost 1% or 0.90. The total gains are $686. Now, in regards to the last week, the portfolio is up as well at $4,416 or 6.13%. In the last month, the portfolio is up $1,722 or 2.39%. In the last quarter, the portfolio is up $3,794 or 6.05%. And then all time, the portfolio is sitting at a nice gain of 22.78% or $9,207. Now, here's the thing. This is the highest gains that I have had in this portfolio, so it's really awesome to see that number, and hopefully I can go ahead and take that number into the 5-digit mark. Now, additionally, I do want to go ahead and show you guys this as far as the market gains and the earned dividends. The reason why I really like investing in this type of strategy is because I have $758 in earned dividends, and then the market gain, I have $8,448. So I am generating profits and making money in 2 separate ways. Now, just to share with you guys my dividends just in this last week, I want to go ahead and just show you guys the activity on just the dividends just in this last week. Now, I'm getting dividends basically almost every day at this point. In just this last week, I've got dividends from American Express, from Air Products and Chemicals, from Lowe's, from TD Bank, from JP Morgan Chase, from AT&T for $50, which is probably one of my highest dividends, and also from Verizon. So these are just the dividends just in this last week. Now, in regards to this portfolio, currently I am sitting under 50 stocks. I've always had around 50 stocks, but right now I'm sitting at 47 stocks. I've actually sold out of a bunch of different stocks. So I'm going to go ahead and show you guys the stocks that I actually sold out of, and there's 4 stocks that unfortunately I did go ahead and get rid of at this point. Now let's go ahead and look at those 4 stocks. Basically on November 6th, I had 12 buys and 1 sell. Here's the thing, guys. I got rid of Altria Group. Now, Altria Group is not a bad company for a turnaround company, but here's the thing. When I go ahead and look at Altria Group's growth potential, I just don't see this company growing. If we just look at the trend over the last 1 year, they're down almost 15%. The last 5 years, they're down 30%. I looked into this company a little bit more, and I realized that, hey, this is not going to be a potential buy that's going to fit good in my portfolio because I focus on dividend growth. Now, the reason why I kept this company for so long is because of their dividend yield, which is 8.69%. So that's a really high dividend and a really nice dividend. But then again, as I look for the growth in the next 5 years and the next 10 years, I'm just not convinced that Altria Group is going to go ahead and turn it around, because just this sector overall has been hit, and until Altria Group goes ahead and figures out their business model going forward into the future, I'm just not convinced on this company. So this was one of the companies that I did go ahead and sell. And then additionally, these are the different companies that I went ahead and allocated that $678 towards. So I bought DLR, Cisco, Starbucks, Disney, Costco, Comcast, Walmart, Lowe's, Target, Pembina Pipeline, Store Capital, and Realty Income. Now, these were just my trades in this last week here, guys. But additionally, if we go ahead and look at the big moves that I made, I had 15 buys and I got rid of 3 other companies in this portfolio. Now I know you're probably thinking, Andy, why are you getting rid of these companies? But I'm gonna go ahead and tell you guys exactly why I sold out of PPL Corporation, General Dynamics, and then Pembina Pipeline. Now PPL Corporation is an awesome utility company when you go ahead and look at gas and electric utilities. But here's the thing, when I go ahead and look at my portfolio, I have 4 companies that basically trade within that same sector. I have Duke Energy, which basically focuses on the same type of business model as PPL Corporation, and they're basically a gas and electric utility company. I also have Dominion Energy. Dominion Energy basically does the same exact thing. And then I have NextEra Energy, which really focuses on renewable energy and basically is my bigger bet on the energy and utility sector because they focus on wind and solar energy. So I basically took the allocation from PPL Corporation and I divided it up into NextEra Energy, Duke Energy, American Water Works, as well as in Dominion Energy. So I wanted to go ahead and just consolidate overall my holdings within the utility sector. And then again, if we go ahead and look at PPL's chart, they're basically trading sideways. The nice thing with this company was they have a higher dividend within the utility sector, which is at 5.58%. But then again, I'm looking for growth along with dividends. In this company, I just don't see a growth potential for. And if my money's just gonna sit there and not grow for me, I'm really not about that. I want to see my money grow and pay me out in dividends. So overall, in the last 1 year, this company is down 14.74%. In the last 5 years, they're actually down 13%. And if you look at the last 10 years, they're only up 6%. And that's not even keeping up with inflation. So at this point, I did go ahead and get rid of PPL Corporation. Now, additionally, GD or General Dynamics. Personally, this was actually probably the hardest decision to go ahead and cut this company because this was one of my core holdings that I actually purchased when I started this portfolio, and I believe this was actually one of my first 10 holdings that I had in this portfolio. Now here's the thing, when I look at General Dynamics, I love their business model, but overall another company that pays out a nice dividend, but I just do not see a potential for growth. So because this is not fitting within this dividend growth strategy, fortunately, I had to cut General Dynamics right out of there. Now, General Dynamics does have great contracts with the government, and they basically make a lot of military type vehicles and tanks. So this company, I believe, is going to be around long term. But if you just look at the overall growth, they're down 18% in the last 1 year. In the last 5 years, this company's only grown by 5%. And then if you look at the last 10 years, they've had a little bit better growth there at 121%. But just looking at the short term of this 5 years or 1 year, I'm just not convinced that this company is going to be trading upwards and growing. But they did have a nice dividend at a 2.9% dividend within the industrial sector. So that was why I kept this company around for so long. And now finally, guys, the last company that I got rid of was Pembina Pipeline Corporation. Now here's the thing, within this sector and within the energy sector, I basically have 3 stocks. I have Pembina Pipeline. Additionally, I do have Chevron, which is right here. And then the last one I have is Enterprise Products and Partners. So I basically took that money from Pembina Pipeline and I went ahead and put it into Chevron as well as EPD. Now EPD and Pembina Pipeline are very similar as far as their business models goes. They're both companies that focus on gas pipeline and storage facilities, as well as they have transportation as one of their business models as well. And if we just go ahead and look at Pembina Pipeline as far as their growth potential, this company does have a little bit better growth potential. But at the same time, as far as getting a growth on my returns, I just don't see that likely over the next 5 to 10 years. If we look at the 5-year chart, they're actually about break even. If we look at the 1-year chart, they're down about 33.71%. And then overall, if we look at the last 10 years, they're basically right near that break even as well. Now this company did pay out a really solid dividend, 7.93%. But then again, when I go ahead and look at the portfolio and I go ahead and look at my energy stocks, I'm still down in the sector, 9.32% or $76. But if I look at the 2 stocks that I have in here, I'm up in EPD 21%, but I'm down in Chevron 15.48%. But overall, this actually only equates to 1% of my overall portfolio. Now guys, if we look at the overall stocks and the different sectors that I have in here, I do have a link down in the description if you want to go ahead and see all the different stocks that I have in this portfolio. Currently, I am up in every single sector. The only sector I'm down in is going to be the energy sector, which I'm down about 9.32%. But to see all these different sectors in the green by this much, I mean, this is awesome. I'm very excited, very happy to see that I'm up roughly around 15 to 20% in a majority of all of these sectors. So that is extremely awesome. I will tell you guys, if you're interested in investing in the stock market, I would say it's always better to be in the market than to be sitting on the sidelines. Even if you allocate $100 a week or $100 a month, whatever it may be, it's good to get in the game because you honestly don't know what the market's gonna do tomorrow. And yes, I can also lose money tomorrow and the market could still plummet. That's why I focus on dividends and I focus on this dividend growth strategy because I'm still making money by focusing on buying dividend growth stocks. Now, additionally, I do have 3 buys that I'm buying today, but just to show you guys the different stocks that I bought on that particular day when I sold the 3 stocks, these are all the different stocks that I bought. I bought Nike, Lowe's, Duke Energy, Nextra Energy, Comcast, American Waterworks, Waste Management, Target, Honeywell, Chevron, Dominion, Union Pacific, Store Capital, Starbucks, and EPD. Now, just in this last day here, I had 4 stocks that I bought, and these are basically the stocks that I'm actually buying today as well, and these are the stocks that I'm going to be focusing on throughout this week. But I bought Microsoft, Nvidia, Starbucks, and Target. I'm really focusing and narrowing in as far as the technology sector goes, because if we look at my target allocation, the technology sector did get hit a bit more than the rest of the sectors. While the rest of the sectors are up, the technology sector is down. So because my target allocation is at 24%, right now my actual allocation is down to about 23%. I'm going to be investing and buying a bit more to go ahead and get closer to that target allocation. So the stocks that I'm currently buying in this portfolio as of today are going to be Nvidia, Microsoft, and Starbucks, but majority of the money is going to be going into Nvidia and Microsoft. But guys, this is basically an overall view of where this portfolio is at for this week, and I'm going to go ahead and just wrap it up at this point with this video. Now, if you want to go ahead and follow me on this journey, I like to go ahead and keep everything very transparent, take you guys on this journey. If you're thinking about starting a portfolio, I hope that I've given you some ideas as far as dividend growth stocks within this portfolio. Like I said, I'll have a link down in the description if you want to see all the different stocks I have in this dividend bucket list portfolio. But I would honestly appreciate it, guys, for all the transparency and all the effort that goes into these videos. If you don't mind smashing that like button, as it really would help and make my day. But thank you guys again for watching this video. If you are interested in investing, I do have a couple affiliate links that do help me out. But thank you guys again. I'll see you guys at the next one.